The stock market through last Friday in its first 22 days of this bear market fell by 32%. And then the previous 13 bear markets that we've had, the worst one, 22 days in, fell a little over 7%. On average, the other 13 fell 5%. So this market, this bear in the first 22 days has fallen almost 6.5 times more than any other bear market in post-war history. That at a minimum, I think that's got to say there's a lot of damage already incorporated into stock prices today. We're going to get bad news, but a lot of it I think is in there. I think the reason it came down so fast, Scott, is because there was no debate about a recession. We just proclaimed one by announcing we're going to shut down everything. And so the stock market didn't wait like it usually does to debate whether it's just a slowdown or recession. It just instantly went to the recession case. So I think a lot of this is in the market, and with values where they're at and panic at very high levels, I think it's okay to be nibbling away on bad days. I agree with David. I wouldn't put all my chips in. I'd let this thing settle down. But I do think if you have a horizon 12 to 24 months, you're going to be happy if you have a little risk here right now.
What happens on the vote, assuming it passes one day this week? We sure hope.
I think to me, I don't think it's the be-all, whether we pass this or not. I think we know we're going to get a stimulus package at some point, whether it's tomorrow, whether it's Saturday, we're going to get one. And that's not going to solve everything right away either, Scott. It's more of a bridge to hang in there. What we're going to have is a curve bend at some point. I think we'll probably get one, but until that happens, fiscal stimulus isn't going to be the savior. Fiscal stimulus will help a lot when the curve bends, because if you have a bridge under companies, then after the curve bends, that could build a lot of confidence for buying down.